Yeah, they did. Looks like.
Okay, weekly roundup. It
Yep.
is Friday, May 13th.
Friday the 13th.
It feels like the last couple weeks have been Friday the 13th, and today has been the better of the days.
Yeah,
So it's like bizarro Friday the 13th.
that's right.
I don't know.
Exactly.
That's the best I got. Well, we
Yeah.
are in a better mood today because we have had a bit of a rebound here.
Mhm.
I don't know if you want to that's where you want to start with this, but give us a lowdown of the weeks past.
Yeah. So look, I think as I looked at things over the weekend, I think I tried to articulate in my Monday note there that I think sometimes it's a matter of trying to look a little bit past the micro and see what's happening in the bigger picture. And so with kind of that view coming into the week, I looked at where things were and just kind of the panic that was starting to ensue in the broad markets. And Monday was one of the first days as well. Well, Friday was, but Monday was one of the first days where we had a bit of follow through in the bonds as well. So stocks were down, bonds were up. Same happened on Friday. Same happened on Tuesday, Wednesday, Thursday. Today we had a bit of a reversal of that, but it's the first kind of multi-day session in a while where bonds have started to say, yeah, we agree. We think a recession's coming. And so, kind of coming into this week, I looked at where some of these businesses were trading, some companies that we've owned and stayed with, but also said, what should we look at doing? And Coinbase was one of the companies that came under pressure this week. Some of that had to do with the Terra Luna, the depegging of the UST, which I won't go into detail on that because it's a complicated thing, but essentially there was a crypto stable coin that got destabilized, and a coin basically went from a multi-billion-dollar market cap to zero in the span of about 5 days. So that caused a lot of disruption in some of the exchanges, with Coinbase and Binance being probably the major players that got exposed to that. The Coinbase's earnings came out this week. They're a little bit weaker than expected. Their lawyers had them kind of change some of the wording to say, Coinbase is more like a bank and not necessarily like a custodian. And what that means is that if it's like a bank, means that Coinbase actually owns your coins, similar to a bank where the bank actually owns your dollars, so you don't own them. So they had to change the wording a bit. That made it sound like if there was a bankruptcy in Coinbase, which I don't believe is possible, but if there was, they would actually own the coins, and the creditors would get first crack at the money. So what that resulted in was an opportunity, and so the stock came under pressure most of the week, and I think I bought it 3 times at three separate entry points as the price came down. It's closing the day here up about 16-17% today. But so I think we saw the bottom under some of these things yesterday morning. There's kind of a flush, lots of money being sold, capitulation, lots of things just getting hammered. And so sold some yen and added to Coinbase. The other company, which is Teladoc, which I think is a super innovative health company that I think long term has tremendous potential. The stock's been beaten and battered. Similar, I bought that a couple of times. And then more on the conservative side of things, lots of companies have been kind of pulled out for dead. And in Canada, it's the first time in a long time that I bought Power Corp or started to nibble away at it. So Power Corp was trading at a 52-week low yesterday. With a 6% dividend. And so as I think about what their business is, it's primarily an insurance and asset manager. With rates rising and increases their costs, maybe makes it a little bit of pressure. Anyways, I look at it, I think it's a great company. And with my view on where I think things are going, it's an opportune time to just kind of start picking away at it as well. So lots of activity for the first time in multi-weeks, and certainly kept things very active and busy. So I know it's long-winded, but let me just wrap with the kind of my comments here. As we finish the week, you're looking at TSX down about 4.25%. S&P down about 5.5%. These are on the week. NASDAQ down 7%. And then we look at the inverse of that, which I mentioned, which is bonds. So long bonds are up about 2%. The 10 years up about 1.5%. These are on the week. And kind of the short end, the 0 to 3 years are up 0.4%. As well, the US dollar is up about 1.5% versus CAD this week as well. So lots of action happened this week.
Yeah, no kidding.
Yep.
Okay, you kind of mentioned the things that you did in the portfolios there. Did you want to? Was that it? You kind of rolled that into what's happening in the
Yeah,
world there.
I think I generally rolled it in there. There's
Okay.
a couple of other things like the RCAF and the block and some of these businesses. Just as I look at where I think the future goes, and look at how hard these companies have been hit, I'm kind of at that place where probably sometime in the next 0 to 6 weeks, we probably see a bottoming process in the growth names, particularly with bond yields turning around this week. So bonds up, yields down. That's kind of a signal to say we're in the kind of the bottoming with these growth companies. It doesn't mean the index can't go lower, which it might, but I think we're probably in that 0 to 6 week time frame here, where we're starting to see some of these companies bottom, and I think have huge explosive growth potential. And so, as I put out, I think a 1-minute clip or so this week on LinkedIn, just saying, when things are like they are, where you get this kind of extreme fear, this extreme uncertainty, this extreme, like, we're just get rid of things. I don't care. I don't want to own it. I don't even want to see it. That's typically a signal that we're reaching that point, and that's the time you got to take action. And it's uncomfortable and feels terrible, but it's the time to say, this is where kind of maximum opportunity is.
Gotcha.
Yeah.
Okay, before we get in, why don't you get your charts ready to go there? And while you do that, I know last week we mentioned that we were going to do kind of a mid-year wrap up, or sorry, mid-year review, kind of talk about more detail where the market's at and some of your predictions and whatnot. Obviously, we were supposed to do that today. We didn't do it today, but we are going to do it next week. Just the schedules didn't line up for us, so we are going to do it next week for sure.
Yeah, thanks, Scott. That was a good reminder.
Okay.
I meant to mention that at the outset. So,
yeah.
Yep. So things lined up. We got a few things to update on as well with that in our call next week. So we'll do that. But I put a similar slide to this out in the daily today. The one that I showed in the daily was the rate of change, really, of how much money's come out of the banks in the last 5 months. And this is the absolute amount. And so as I put this up, really what it means from a simplistic perspective is that, we've had somewhere around $1.5 trillion come out of the financial system in 5 months. The last time this happened, it took about 5 years. And so as I talk about this extreme financial tightening that we've seen, it's just an important reminder around why and what's going on, and why I keep saying, this is happening really quickly. This is going to put pressure on a lot of different things. I thought this was a great way to kind of summarize what I'm seeing there.
Yeah, that's a good one. Yeah.
Yeah. The other, which we've talked a little bit, I continue to talk about inflation, and we've had these kind of debates on and off with lots of different people that I talk to, financial experts as well as clients, just around wage inflation. This is a quick snapshot of what's just happened. Is we went in this kind of quick snap up where wages really spiked, and we've come right back down below our trend line here. And so, good, bad, indifferent, we'll see. But if wage inflation isn't keeping up, that's going to have kind of knock-on effects to many things, including a faster consumer slowdown.
Gotcha. Good stuff. You have one more? Or that's it? Oh, yeah.
No, I got 2 more. The last one's kind of just a fun one, though.
Okay.
This is just as we've talked of clients over the many weeks, it's just around asset allocation and mix and holdings and things like that. And I've had probably more conversations with conservative clients than with growthy clients, because growth clients are a little more comfortable with some of the risk and things fluctuations. Where this is really a snapshot. It's showing that it's been a bad time to own anything. And so, as I've mentioned, from a historical perspective, this is a rare event. This is 30 years. If you stretch this back over probably 100 years, you're going to get a similar number as well, where this is a super unique event where bonds and stocks have gone down together. And so I think the inverse also applies when this happens, and we see an explosion of the two of them together. And I certainly don't think this happens tomorrow, but I do think this happens in the back half of this year. And so, as I think about why and what we're holding in portfolios, I continue to think about how do we make sure we're best positioned for what happens on the other side of this.
Okay, great.
All right. And last one. So coming up May 22nd, 2010, you may recall that pizza was sold for Bitcoin. And so that was 12 years ago. Somebody sold 10,000 Bitcoin for a $40, two $40 pepperoni pizzas. And so this guy sold 10,000 Bitcoin. Actually, for the year, he sold 10,000 or 100,000 Bitcoins.
Wow.
Over that period of time. Obviously, 100,000 Bitcoins today is worth about $3 billion. So just to give you a sense, like why this thing's coming up, it's been 12 years. And love him or hate him, he was the first guy to figure out how to do it, and it really started the ball rolling for what we see today, which is companies like Gucci came out this week and said we'll accept payment, crypto payment for our goods, so you can pay with a number of different things, Bitcoin, Ethereum, and a number of others. But so it was really the one that started the ball rolling, and that was 12 years ago this month. So it's an interesting thing that I continue to pay attention to.
Do we know if that guy still holds any Bitcoin, or?
He does not.
Oh, that hurts.
It's like the third founder to Apple, right? You probably remember that story where
Yeah.
I think he cashed in for $1,500 or something, and it'd be worth 40 billion or so today.
Oh my God, that would be hard to ignore.
Yes.
Every morning when you woke up. Oh man, put the suit on every day, and you're like, oh,
yeah,
could have been different.
It was close. It was close. I was right there.
Exactly. All right. All right. So let's look ahead now to next week. What do we? Before we do that, we do have a pretty good group on here today. So if anybody has any questions, comments, or anything like that, now's the time to do it, because we're gonna probably get about 5 or 10 minutes left here. So throw a question in. All right. What are we looking ahead to for next week?
Yeah, so this week was the week of high volatility, and so as I've had conversations throughout the week, what happens is volatility expands and moves up through kind of the higher risk ranges. That puts a lot of pressure on everything, as I mentioned, and so I'd be looking at what's happening in volatility next week. So, and that was across the board with gold and bonds, and obviously stocks, of course. We saw those volatility levels kind of spike, and so I'd look and see, are these things starting to come in a little bit? If they start to come in a little bit, that's going to give us a better picture for where the trends are happening and continuing. So I'd like to see the bonds continue to move, we'll say sideways to up in price, yields down. But I'd like to see volatility come in. Lots of action today as well in a lot of these shorted stocks. So let's see how those react. But as I mentioned in the dailies, don't see a tremendous trend changing. I think that the outlook for a recession is my highest base case right now. And thank you. I've had some clients send some research on that as well. I appreciate that. But at the same time, I think about what does that look like longer term? And what we've started to see is recessions are shorter and sharper over the last 30 years. And on top of that, we're coming out of 2 years of COVID. So we're getting a lot of these fits and starts where you get really skewed numbers. That is really, we get an acceleration, deceleration very quickly. And so, I'd be continuing to look and follow those numbers, but I like to see volatility come in a little bit. But I think over the next 0 to 6 weeks here, there's lots to do and lots to get prepared for. But from a historical perspective, recession is the best time to buy stocks and sell bonds. So there'll be, I think, lots to do over the next many months here.
Awesome.
Yeah.
Okay, no questions there. So anything you want to say in conclusion here?
Yeah, I would say we are having lots of conversations with clients right now, just checking in, providing kind of an update around what's happening. And if I haven't spoken with you and you want to have a one-on-one, certainly feel free to reach out to Scott or I, and we'll book something into the calendar, and we can go through the individual portfolios. But yeah, quite busy with the action in the world today. I think what I didn't mention today was, of course, the war that's happening and continues to happen. So that plays a major part in what's happening in the world as well. So that still haven't forgot about that. Some supply chain issues starting to pop up a little bit in China right now. But if you do want to continue to have a specific one-on-one conversation about what it looks like, what does the recovery look like? How do we expect it to play out? A little bit more minutia that's related directly to you, then certainly let us know, and we'll book in a meeting and have a chat around how that looks.
For sure. We should also, I've had a few people ask on calls that I've had this week too, how our CHEO ride went. We're doing it virtually again. They did have the one downtown, but Ben was away that week. So Ben and I are going to do it again this week. Thanks to everybody for donating to that. We got a good amount that we got donated to CHEO. Now Ben and I just have to get the schedules together and actually do the ride, which we will. We did 100K last year. Not doing 100K this year. Ben would love to see me suffer, but we'll definitely. It'll be a worthwhile ride for sure.
Indeed.
We'll get some sort of video there for sure. So in the next let's commit to the next couple of weeks, 2-3 weeks, so we get that done.
Absolutely.
Cool. All right. Well, we have a big week next week. We have some announcements. We're going to announce we'll send out the links and stuff for the roundup. We have a couple other things we're going to announce next week too. So check your email next week. That's it.
Perfect. Good.
Good.
Yep.
All right, everybody. Have a great weekend.
Thanks for joining.
We'll see you next Friday.
Sounds good. Take care.
Bye now.